Good Fed Day, Warriors. How's everyone doing today? Alexander, Hugo, Steve Volge, how are you? Let's take a look around.
I'm good, Dale. How have you been?
Doing okay, buddy. So, you think the Fed is going to do what everyone expects, which
What does
is,
everybody expect?
well, you know, what they're used to, dovishness, or will he surprise the market by not being dovish and continue to prepare people for the taper that never happens?
I think the Fed is going to continue to be as dovish as the situation permits at each given time, right? So
Okay,
whenever it even turns less dovish, it's still going to be as
dovish.
dovish as possible, given where we stand, right?
What do you call a hawk and a dove at the same time? They're a hove or they're a dock. Anyway, it's going to be interesting to see, especially after yesterday when the market got hammered. Um, this candle on the Nasdaq is the biggest candle I could find, even bigger than the last sell-off. So, we rallied to new highs here. Will we do the same? Right now, we're at the 61.8 level. There were some earnings yesterday that weren't so great, but they brought it back. I think Google was good. Hello, Ryan. Looking at the Dixie, to me, it's kind of no man's land. I want to be a buyer here, down here, and I'd be a seller up here. And in between, I'm just guessing which way it's going to go. But if they are hawkish, I would, look for sales about 100 higher. And if they're dovish over the next several days, I think this 91.40 level is going to be the battleground for whether we fail and just make new lows or hold and get one more wave back to the upside. And pretty quiet day. One thing I do have some conviction in, and right now it's not that easy, but if they are dovish here, to me it looks like that was the low in yields last week, and I'd be surprised to see it back under this closing back under this red line under 120. So to me it looks like this was a nice spike, capitulation at 113 or so, and maybe it pulls back to 120. And if we start getting back through this moving average of 130, it's going to look pretty good. That was the high of this rally in here. So, I'm getting cross current signals. Normally that would be constructive for the yen, but I don't think the yen looks that great. And since silver is acting better than gold, silver broke down yesterday. Okay, there was a bear flag I've been talking about for about 3 weeks. So silver, could rally back to 25, but you really have to pay attention to gold because look at where it rallied to last night. Confluence of the moving average at 1808, and now we're sitting on support. I'm anticipating a breakdown in gold, and this is about a $40 formation, so that would take it down to the prior lows down here. Um, Down here. So we'll see. Gold looking heavy. So that's my view going into the Fed. I don't do a lot of positioning in front of it. One other thing I'm looking at when it comes to metals, it's not the precious metal, but I see two scenarios for copper. Here's the left shoulder, here's a head, and we may be developing a right shoulder here. Back under 420, copper will trade in the three handles. So keep an eye on that. It's right now it's the strongest metal because it's an
Short
industrial.
it.
Short it here, Blake.
Short it.
Okay. So
I'm just kidding.
was short.
I'm not. I'm actually not kidding, Dale. But
Yeah.
I
Doesn't
think
that look like a nice little play setting up here?
Look, I'm a big fan of like selling into Aussie strength right now, and I think a lot of these, the whole transitory inflationary pressures, I believe, are good. I don't know if they're necessarily transitory. I think they'll be sticky at some point, but I think the move higher in a lot of these commodities, you see them fade one after the other. Whether you're talking about lumber, you talk about coffee, you talk about copper probably needs a fade. Underperformance of precious metals. As you were just talking about gold and silver. I mean, why not copper be hit too? So
why not at least a correction in oil, which is the stickiest of everything you talk to.
Hey, yeah, right. Well, yeah, and maybe even oil too. Hey, I wanted to ask you really quick. Do you know if your interview is going to happen today or not?
She's okay.
Oh, okay. All right. Sounds good.
Yeah,
right.
It's back up. Sometimes these platforms make mistakes.
Okay. Hey, you go ahead and finish out. You're going to do it. I'm going
to bring Ryan in now, Blake. Okay. So how you doing today, Ryan? What's new over there? If he's here, he said good morning to me. How are you, Ryan? Okay.
Hello.
Sean, there you go.
There we go.
So how are you? Everyone in Europe waiting on the Fed too?
Yeah, bit of treading water here, but I think we're seeing a bit of fix action on the hourlies and things like that, just some end of month stuff, because today is value date at the end of month.
Are you in Malta, Ryan?
In Malta? I wish. No, I'm in the UK.
I thought you said that. Okay. All right. So everyone's
I said treading water.
Oh, treading water. All right. All right. Is it beautiful there, Malta?
Malta's nice. Yeah, nice and hot.
Okay.
Not so hot here at the moment.
Yeah. Summertime and it's not warm in the UK.
Yeah, no, it's okay. We got a bit of cloud today, but the sun's out, and that's the main thing.
Yeah. Okay. So Ingmar's saying it's very small but good taxation system on Malta. Is it kind of like Gibraltar? A lot of people go there too for tax reasons.
Yeah.
Yeah. Okay. So good for Russians. You mean it's better than where did they used to keep their money before the bail-in? Where was it? Cyprus. Okay, so they moved their money from Cyprus to Malta.
I think many of them still in Cyprus.
Yeah. Well, you're in the part of that crew, aren't you?
What do you mean?
A Cyprus millionaire? Yeah, he is.
Oh yeah, absolutely.
Got a few vaults buried across the island.
Absolutely.
How long would it take you to get to Cyprus from Athens? Just a quick boat
1 hour flight.
Okay.
It's a 1 hour, 15 minutes flight.
And how much cash can you bring on the plane without getting
another plane?
10,000 euros, as with all European countries.
We're gonna need a bigger plane.
Okay, it's kind of like here in the U.S. Yeah, if you're carrying more than that, you must be some type of criminal. All right, so Ryan, any feel before the Fed?
No,
just wait and react.
Yeah, we're just treading water a bit, as I say, and seeing maybe some fixed moves going through, a bit of jockeying into the end of the month. It's things have been up and down. Euros, dollars been up and down. Tight range. Dollar yen pretty much doing the same. Yen pairs, crosses doing the same. The only real levels we've got ongoing at the moment is we've got cable knocking up against that 139.10 area. That's been the most recent top. Failing to break it at the moment.
Yeah, you have some 50-day movings coming in around 39.50 or so.
Yeah, which is sort of like the next secondary level after that. But the one thing I am a bit more excited about is that we finally look to have got a break in euro sterling. This is that 85, 30, 50 zone that I've been talking about for quite a while. We've had a breakdown of that, and we're just sitting between there and 8,500 at the moment. So I'm actually, despite being core short, I'm actually long at 85.05 just on a big figure play. I've already taken 10 pips on that you know, it's
Okay.
one of those situations where my long-term head is like, right, I'm short, fine, happy to see this level go, but my short-term head's like, well, it's a level down here, might as well trade it. And but again, as we spoke yesterday, I'm looking to reverse the long here into a short, and I've got a sell stop currently sitting at, where have I got it sitting at? 84.75. That's
Okay.
for the core short.
Okay.
To add in.
So
If we break that low,
yeah, there it is. 72. It's a low. So you're placing your stop a few pips above it, so you get a better fill or a little lead
yeah,
on the rest of the stops.
that was a bit of a spike. I think it's 80. That's probably the level entirely.
Okay.
And that was just a prior break there. I actually tried the same thing and got stopped out trying the sell stop there. But I think if we get another move down there, it could be the one that goes. But I'll keep it tight either way in case I'm wrong.
Okay. All right. Appreciate that. So, this is kind of a wait and see day. You don't want to put out a lot of, recommendations here. The S&Ps have diverged on the daily for the 1 millionth and 20th time on multiple time frames. Similar scenario in NASDAQ now too. So what's it going to do? Blow to new highs one more time? I know some people looking for 15,350. So we'll see what happens here at the 61.8 level. I think that Powell has enough cushion with where the market is at that, his goal is to get the market used to a taper that probably doesn't happen anyway. So that when it does begin to happen, it's absorbed in the market. So, I mean, if he was ever going to be a little more hawkish, he has plenty of cover after this move in the markets. So we'll see. It's going to be interesting to see because I actually don't think, and this is not my idea, but was called to my attention by Harold Malgrim, who I interview, who's been on 5 different presidential administrations, who said that he didn't think Powell was going to be renominated. And then a few weeks later, someone asked Janet Yellen exactly that question. And she didn't, are you going to renominate Jay Powell? And her answer was kind of muddled. It wasn't like, yeah, we are. And Harold seems to think that she would prefer to have Brainerd in there. That's more along her same, even more dovish than Powell philosophy. So we'll see. I mean, for his legacy, no one wants to hand off, an economic crisis to another Fed chairman. But if you think about it, he doesn't have that much to lose by maybe even doing the right thing and pulling away the punch bowl, since, he's not going to be here anyway. And these guys think about their legacy. And if he does nothing into the end of the year, his legacy will be, maybe the collapse of the dollar instead. So anyway, just something to think about. Jay Powell, it's interesting because, he was President Trump's nominee. Trump threatened to fire him, I don't know how many times, until he started, coming around to being more dovish. And this administration most likely wants their own person in there at the end of the year. I believe that's when his term wraps up. So we'll see. And also, you know what people aren't talking about? Where's the stimulus deal on infrastructure? Where is it?
Different story.
Yeah, so it died. There, I haven't heard anything. It's near the end of. They're getting ready to go, right? The end of July. They have an August recess. So there's one thing that could generate some bipartisanship, and that would be a big stock market sell-off, so their constituents call up and say, hey, my IRA and my retirement account and my accounts are down 30%. Vote for this infrastructure stimulus. So that's something else Harold said that they may try and engineer. And, if you believe that the Fed, manipulates markets, then you I don't know why you can't think that the Fed couldn't engineer a market correction for political purposes to get some legislation through. What do you think of that? Crazy?
Yeah, it may be possible.
Yeah.
It's, when you're talking politics, you don't know what they're after. They all want to make themselves look good. It's always the other side's fault. If they can get a deal through and it shows even if it is a bipartisan deal, each side will crow about what they did to make it a bipartisan deal.
Yeah.
In a market sense, we pretty much know the numbers. So how, as soon as they announce, we're doing 2 billion, 2 trillion, 3 trillion, whatever it is, the market prices and that's it. What'll come after is when all that money is going to get spent. If it's over the next 10 years, what stocks are you going to buy for the next 10 years specifically? So yeah, it's one of those things where if they get an agreement, we'll probably see a market move. Stocks will be buoyed. Yet there's some money coming in, and then as usual, we have to look at the details and see the conditions behind it.
Yeah. Well, so far it doesn't look like we're going to have an infrastructure deal, at least not until the fall. So we'll see what happens the rest of the summer. If there's any pressure on congressmen to act, if they, if we do have some type of sell-off. Anyway, I'm just talking my book. How you doing
never
today, Blake?
talk your book. You never talk your book.
I'm so biased that they can't put me on any jury.
Well, good morning, Dale. Good morning, Ryan. I think I heard Stelios. I even heard Steve. Yeah. What the?
He's on the beach participating in F.A.C.E.
I'm here.
I saw that picture.
So what are you doing here, Steve? You need to be going swimming in the Aegean Sea. What are you even doing here? Like, seriously. Like, I know you like,
he
Dale
likes us,
but
wants to hang out.
I mean, but come on, man. You're by the sea. Go enjoy. Anyway, no.
What's the water temperature there, Steve? In the water there? In Fahrenheit.
Idea, but it's very warm.
Really?
And Dale, if I had to guess and throw like a Fahrenheit temperature on the water, I would venture to guess it's probably close to 80 degrees. If I had to guess.
God, like bath water. Nice.
I'd venture to guess that it's probably around 80 degrees. Yeah.
It is really warm and comfortably.
Yeah. It's like 80 is super comfortable, and maybe it's probably 78 to 80. It's gorgeous. But anyway, how are you guys doing today? Pre FOMC day. Good to have you. Hey, I just want to mention this to everybody that's listening in really quick. I was sitting here. I pull up. Obviously, I was looking at the charts. I was looking at the sterling. I've been trying to find a good place to short it. I have some orders overnight, trying to sell it up here around 139 and change. Never got touched. But I had the Trader Summit site running, and down here where it says breaking views, these are all the new articles. Just take a real quick look for those of you guys. Like, just stop here for a second. And you can see what's the Fed going to do this next week. Fed Day, Mark Chandler, Macro B was talking about the sterling. That's one of the reasons why I was actually looking at the sterling. Fed preview, what to expect from the Fed. Guys, you want to know, like, you want a good place just to go read every morning, and especially like on a day like today. Go to Trader Summit and go to the site. We have so many great contributors there. I'm going to go ahead and put that link in the chat box. It's a free website, so just use it as a resource. It's a great place to go in the morning. I say in the morning. Obviously, it's in the morning for me. But when you first get up or you first get in front of your computer, no matter what time of day it is, jump on there, jump on the breaking views, which is just underneath these big fat panels here. Jump over here and you're going to see all the latest articles that have been posted. It's a great place to check out, like, to get prepared for, especially on a day like today. Obviously, you guys are here and listening into, Dale and Ryan and some thoughts and ideas. And guys, I want to just hear what you have to say. First of all, I think the Fed's going to. I'm scared that today's reaction is going to be very similar to what the ECB's reaction was on last week. A whole lot of nothing, right? I mean, that's how I feel today, and I'm worried that we're just going to have very little reaction because the Fed's, they've got the Delta variant, even though it's not, it's not something that they probably will even reference like by name. That is going to be one of the reasons why they stay hesitant, as I mentioned the last couple of days, because they're going to keep them from being too hawkish, is because they don't know how the Delta variant's going to affect globally. I mean, we're seeing cases rise. I want to give you an example of something. My father-in-law was going to travel to Greece. He had his tickets for September. He had to actually cancel his trip this weekend. My stepmother's or mother-in-law, excuse me. She's a physician that administers COVID shots. She is the most conservative person on the face of the planet, like mask wearing, medical professional, been a family physician for 35 years. She was hosting a big family get together in 2 weeks, and she just canceled on us last night. Because, she's starting to see all these COVID patients that are vaccinated. They're vaccinated.
They're trying to downplay all the breakthrough cases. They're saying it's rare.
So she's getting all these cases now. It's not translating to like more deaths, not yet. But the fact of the matter is it will. And the point I'm trying to make here is, will the more cases, even if you're vaccinated, is it going to translate to more cases and behaviors changing? Not so much in the U.S. I'm more worried about globally, and I'm assuming the Fed is going to be a little bit dovish because of that. So you have, on one hand, you have an economy that's, doing really well in the U.S. Gangbusters, if you will, is a term that I've heard.
It is
quite a bit. But then, you have the other hand, the COVID variant. So what do you guys think here? I think the Fed's going to just try to walk a tightrope, and we're going to get a lot of, unfortunately, not much a reaction today. But that's my take. What do you guys think?
Steve doesn't think the U.S. economy is good.
Well, employment is doing better. Anyway, you look at it. Obviously, it's depends what type of the quality of employment, but still, and inflation is higher. So and the average earnings growth still going higher. So you could argue that the U.S. economy is doing better. But personally, what I think about today, I think most likely there's going to be nothing new. But as I said in the chat room, I am, for the first time in ages, going to take a punt on a Fed day because I think the risk reward for being short bonds is really, really good, because the market is expecting no change. In the statement, they're expecting nothing. Is it going to be a dovish change? I don't think so. I mean, I think that's very unlikely. I mean, why would they turn more dovish now? What's the reason? Now, inflation's higher. They just cannot. So if there is a change, it's going to be on the hawkish side. If they mention the taper or give a little bit more details, and the market realizes that, oh, damn, this is happening. Because at the moment, 10-year US 120, 125, the market is convinced that inflation is going up, it's going down, nothing's going to change. It's transitory. If the market realizes that this is not going to happen, then I think bonds are going to crap the bed. So I'll be selling in about an hour or two, treasuries and bunds as well.
And so let me just, and thanks Stelios for your opinion on that. And let me just clarify something really quick. So yesterday at this time, we were trading pretty much where we're at right now. We were trading above 4,400, yesterday. Let's see, I can go back 24 hours from now on an hourly chart. Okay. So you go back 24 hours, we were right here, right? Actually, we were right here. We were at 44.17. Yesterday, after this webinar, we do our Morning Edge webinar, and that's for Forex Analytix subscribers exclusively. S&P, we built this out. S&P 4375 is what I wrote. That is because this is the breakout point right here, and this would signal that we're breaking through all sorts of supports horizontally. That was at 4375. We actually went as low as that. Yeah, and so the reason why I'm pointing this out is because that, in my opinion, is the support that is key today for equities. So if Stelios is right, the Fed does throw in a little bit of a hawkish bias in their statement, that support's going to give way. And if that support gives way, you guys know what to do, right? It's going to be higher yields. Bonds are going to sell off. Yields go up. Dollar's going to go up. Precious metals down. Stocks are going to go down. This right here, the blue line is probably the only line that really matters to anybody today that's trading the markets, because that's going to tell you what the Fed is thinking. What you could believe whatever you want. The market will tell you if we break below that level, then the market's viewing it as a more hawkish outlook. So I just want to throw that out there. Ryan, we didn't hear from Ryan. What are your thoughts here? Say we didn't hear from you. We did, but what are your thoughts here?
Yeah, on the Fed itself, I'm pretty much in the same camp as Stelios. I think when you look at events like this, you look at where the price risk is, and we're traders, so we look at where the bigger price risk is. And there's smaller price risk if they're dovish, because a couple of good data points and power being dovish is forgotten about, and everyone's looking for the hawkish signals again. So if they do turn slightly hawkish, and the thing with the Fed is there might be a line or something in the statement that's hawkish, but Powell's going to come and try and talk it down or dumb it down or not make it into such a big thing. But the market's going to jump on it anyway. So the bigger price risk, as Stelios says, is if there's something hawkish there, and then you're going to see a move. I think for bonds I think that's the good play to be into. You've got to be careful though. Take a quick profit if it's there, because we've been here before, and bond yields are lower when the Fed's been more hawkish.
Absolutely.
I don't think that story is going to end just on a couple of line changes in the statement. It's going to bring maybe a short-term move, but I'll be fearful that it goes into reverse again, and see bond yields up 130 plus, and come Monday next week they're trading 123 again. If you're looking at something like tens.
So I just thank you very much, Ryan, for your outlook too, and let me ask you this: are you positioned anyway for today?
Me, no, I'm in nothing. I mean, I've got my long-term dollar yen longs, which will always be noise for. But no, I mean, it depends. I'll be looking at if we get any breaks. It's a bit hard to trade the exact headlines as they drop, because the algos get it, the robots get it, blah blah blah, and before you've even blinked, the price has moved. But if it gets us pushing to some of the the key range edges, that's what I tend to look at, and that's where I ask the question, right, if you think this is hawkish dollar yen, you've got to break 111. If you get up to 110, 80, 90, and you're not breaking that, well, chances are we're staying in range. So maybe I'll look at a little fade and see if that's the case. And trade the aftermath rather than trying to, position before or try and grab something. But I think, there are some decent risk reward trades, and I think Stelios and his bond trades is one of them.
And let me talk really quick, and thank you, Ryan, for that. And let me just tell everybody how I positioned myself yesterday. If you were listening to the webinars, especially the Forex Analytics webinars, like the daily roundup, We were looking for, I think Amanda covered her short on this head and shoulder pattern. And then you'll notice the 618 and the dollar yen was holding at around the 109.60. I picked this up yesterday. I sold it this morning above 110.08 or 09, wherever I exited. I have to go back and look. We're actually challenging the underside of this trend line. I was trying to hold this position to have it for a kind of a free ride going into the Fed, and it really could be. The only thing technically is we pushed up against the underside of this trend line, so I had to. For me, technically, it got to a level where I needed to take profits. It was, after getting a 50 pip gain overnight, it's like, I didn't expect that. I expected us to be up here by the end of today on a Fed not doing a whole lot, but anyway, just letting you guys know, these are the types of things that if you can play them, pre-Fed and allow it for a setup, and you want to stick with it. Now you got a position where you might have a longer term inverted head and shoulder pattern. And Ryan, your trade that you're a little bit longer term head and shoulder pattern here could obviously play out as well. So it just, there's things to do, but ahead of the what just spiked up? Did we just miss some Canadian data? Sorry.
Yeah, the CPI, I'm just watching it, came in a little bit softer than expected. Seeing the CAD sell off a little bit.
Yeah. So the obviously the data was a little weaker Canadian wise. Inflation data just came out. Oh yeah, it is. What a lot weaker. Surprising. Nice spike up in the dollar CAD. You'll probably fade here, just because it's the Fed. But anyway, all right, good. Dale, I know you have your interview coming up, but let me just ask Steve, because Steve is actually on his holiday visiting us right now. Steve, do you have any last thoughts that you want to give everybody?
Last thoughts.
Last thoughts before you go back to the beach. That's what I meant to say.
Not last words, Steve.
I more or less agree with both Ryan and Stelios. Meaning, I do believe that surprise is more likely to be on the hawkish interpretation of the side, because don't expect anything hawkish. It's just about market comparing, dovish expectations with getting, for example, a little bit less dovish expectations. That's all we can talk about, because using the word hawkish is an exaggeration anyway you look at it. And on the other hand, Ryan made also a good point, which I want to stress out. He talked about how frequently we've seen bond yields spike higher and then shortly after pull back. And that's because we have this relationship that whenever we get less dovishness than expected, the market might react negatively. And I'm talking about the stock market and the risk assets. And that on itself feeds into what is the usual risk of correlation, which means people piling back to the dollar, short-term treasuries, so on and so forth, and that then helping rates pull back. I do think, though, that with rates being where they currently are and with inflation being where it is and inflation expectations not pulling back whatsoever, I do think that we might soon see this relationship break down. So I wouldn't be surprised if soon enough, if the current trends continue, we might not see a risk of translate to lower yields. So
ever in your lifetime. Hey, really quick, thanks, Steve, for your thoughts. I know, Dale, you got to take over. Somebody asked about this move in Bitcoin. I honestly don't care about Bitcoin unless you get above this 38% retracement, which comes in around, let's just call it about 42,000, because that's all, the previous resistance, 200-day moving average around 44K. So we're in a range right now between 30 and 40,000. So if you're at the upper end of your range, if you're long Bitcoin, be very careful. So Dale, do you have to go?
Yep. Hello?
Is she here?
Yeah, I'm ready. I've been ready. Kathy's here.
She is here. Okay.
Yeah.
Sorry to take up her time. Sorry to take up your time. Everybody enjoy it.
problem.
And good luck on FOMC day today. For those of you that are Forex Analytics subscribers, we'll see you at the Morning Edge, in 45 minutes. So we'll see you there.
Good hunting, Blake, Ryan,
Cheers, guys.
Del,
See ya.
Steve.
Bye
All
bye,
right.
Dale.
Okay. Kathy, welcome back.
Good morning.
How are you?
I'm doing great, thanks. How are you?
Good. Great to have you back, Kathy, with the market, levitating up here. I understand from our communications on Twitter, there's not much new going on. The only IPO I could think of that, I had like the initial sell-off after it went public along with Bitcoin was Coinbase. And if you're ready to share your screen, it's that green box. We could talk about what's on your mind.
Yeah, definitely. Yeah, Dale, I feel like I've been saying this, ever since we had our great year, 2020. Things are just in the IPO kind of slow as far as new IPOs. We've talked about this many times. We had Zoom and we had
Right.
Fiverr, and they had these great runs, and now they've just been consolidating. Zoom could be coming back here at some point. Last time we actually talked about the mental capital preservation, 35%. It actually did break that and then kind of held it. Let's just look at it real quick just to connect what we talked about last time. It was right in here, was the 35. And maybe now it's building some type of base, if it can get back and stay over this 40 weeks. So, there's potential in some of the leaders that we had last year. But as far as new leaders, when I look at the screen, and we look at like the liquid leaders, coin is actually number 2 right now. So we'll definitely look at that one. It's usually number 1. I was surprised to see it number 2. I mean, we've got Airbnb, recent IPO came out the end of last year, but it's still in that due diligence phase. It had a run up and now it's going sideways. It hasn't even been trading.
Back to the IPO price, the opening day. We're back there, right?
Yeah. I got to put my glasses on. So $68. So was the IPO price, but the low of that first week was 135, and which it did. Let's see, it did undercut it right here, which is totally normal, and actually it undercut it the second week. But I think this has potential, but it's still early, and we would call this a late bloomer pattern so far, at least, because it had the initial run up, and now it's in that due diligence phase. And when I look at coin, it's a pump and dump. It's been going down ever since it came out. Now it is starting to go sideways. It's holding a range. I've got some alerts here I'm watching, of course. But again, to me, it's still early. Now we've got earnings. This is Market Smith. I subscribe to Market Smith. So it's here. I just noticed it's going to report earnings in 13 days, I guess, it looks like.
Okay.
So, we'll see. Is that going to be a catalyst? But again, for what I have observed and what we've noticed, we weren't able to pinpoint an exact time frame. But the due diligence phase, for me is really 40 weeks, right around that 40 weeks, maybe plus or minus 2 or 3 weeks is at least a minimum amount of time, before, so.
And you're not committing capital during the due diligence phase. You're just monitoring the activity, right?
Well, this next one we're looking at snow. I have been taking some nibbles, and I was telling I was on did a stint with IBD Live last week, and I was telling them that I was making some nibbles, and I was doing it on snow in here. And let me go to a daily chart. So I was drawing some trend lines. Well, this is an old one, but this is actually one of the ones I used, and I just took a nibble, like 1%. Dale, I just getting my feet wet. It's been holding it for the most part, but again, it's early. But at least this black line right here, and you can see it better, I think, on the weekly. Well, just barely, but it's finally at that 40 weeks. So it's been over 40 weeks. So to me, if I'm looking at which one has, more potential, I'm looking at this one above, like coin, where I think it needs more time. That makes sense.
Okay, because they probably, coin is completely crypto dominated. This is software enterprise.
Yeah, I mean,
So, okay.
it's the first one out there that allows people to go in there and buy the actual cryptocurrency. It's amazing what changes we're seeing in the world.
Yeah.
But even this up down ratio, this is a sign of accumulation. We like to see this at 1.0 or more. And it's not even above 1, it's 0.8. So that says distribution currently.
Up down ratio is very important to you.
Yes. I like
Okay.
to see this
And
above
that's
1.
volume?
Yes, this is based on 50-day average volume.
Okay.
And I want to say over the last 50 days, if I remember correctly. Yep. It's just a calculation based on daily average volume.
Okay. So we're already 7 months into 2021. Has IPO activity slowed because of their other options of going to a SPAC or something else instead of going to an IPO as their listing choice?
That's a great question. I really don't think so, because even when I look at the SPACs, and someone was asking me this question the other day on Twitter. Let me pull up my SPAC list. These are volatile patterns.
They sure are broadening. They're higher highs, lower lows. Yeah. Okay.
And just look at these,
Oh, yeah.
and they're all, we're still haven't really evaluated them all heavily. I mean, DraftKings is a little bit more one of the exceptions. The one that someone asked me about the other day was Lucid. And I feel like this is what I see a lot of. You had this initial advance, which I'm calling unofficially the SPAC advance phase, like the IPO advance phase.
Right.
And then it comes back down and it's going sideways. So I feel like this is now the SPAC due diligence phase. And we're seeing this in a lot of them. I think IPOE is another, or one of the IPO. Oh, it already changed its name. SoFi, I believe. Similar pop, and now it's going sideways. This would still be the turbulent zone, like we would apply for the IPO phase. And so I don't know if I would necessarily say, oh, well, the IPOs aren't doing well because they're going into SPACs. I mean, I think the SPACs have a lot more fanfare and news and what's going on.
And volatility too.
Exactly.
Yeah.
But it seems so far that you could still apply the principles of the patterns that we see in the IPOs to the SPACs. And you could probably use, and I haven't researched this heavily yet, but like the date of when, okay, there is going to be a proposed merger. Okay, start monitoring the action from there. And that's usually like that start of that initial advance phase. And then when the actual deal closes, it seems like, okay, now there's this due diligence period where now the institutions are really trying to decide, okay, well, now that all this like fanfare and all the news is dying down, is something we want to invest in the long haul. And that's what we don't know yet, is if we're going to see these great advanced phases like we see in the IPOs after that due diligence phase.
Let me ask you this, Kathy. You've seen so many of these things repeat over and over again that pretty close to the day of or the day after an IPO is usually a peak. Are you ever tempted to short new IPOs going into a due diligence phase? You ever do that?
That's a great question. That's a great question, Dale.
Because you see this pattern over and over again. I'm sure it's crossed your mind. How much is this IPO going to drop before we get into the due diligence phase?
Right. Well, I don't want to call myself a one-trick pony, but in a way I am. I really just like to go long. I like to always stay focused and be on the positive side. And it's probably, I always seem to bring up William O'Neill in every conversation
Right.
I have with someone, because he really wasn't into shorting, and he just always wanted to focus on the long side. So I don't, and I like taking the breaks. I gotta be honest. I haven't been trading a whole lot because I'm waiting for these setups, and I think I'm okay with that. I don't always have to be trading and looking for getting every piece in every possible scenario.
Yeah, sometimes you see things better not having a lot of positions on. You see the forest from the trees, and you kind of become, even if you say you're detached, more subjective once you're in a position.
Exactly.
Right.
And I would hate to
Yeah.
miss a long position because I was focusing too hard on trying to get a short position.
Okay. All right. So with what's going on here, any effect on some of the things that you trade with what's been happening in China? With them reining in technology stocks, et cetera?
I haven't, I don't normally trade China stocks either. I try to stay just the US. There's been questions at times about the fundamentals and the reporting of the China stocks. And so for the most part, I will steer clear of that. One thing I did want to share, though, just to again point out to everybody about the differences between 2020 and 2021 is when I look at, okay, so if I year to date IPOs from 2019 to 2021, and this is just a quick screen that I did. I don't include ETFs. I don't have REITs in here. This is 2019 to 2021, and that liquidity that I've talked to you about many times. We want at least $20 million a day or more. And I just want to see from 2019. Okay, so we're going back 2 years. How many are up 100% or more this year? And you only get 7.
Huh.
See, so I mean, again, there's just not, and these are all like InMode was great if you got it in the institution due diligence phase. This was the first mature base right here. You could still be holding it. Unfortunately, this isn't one that I have. But they're just, and I think this one's a biotech, but there's just not a lot of new merchandise. And if I look at just one more point real quick, if I look at 2021. Now there's 75 that are liquid out of 288. So again, that gives you that liquidity piece. But if I put that 100% on this for 2021, and we're 7 months in, I get zero. I get zero that are up 100% for the year.
Okay.
So
that's interesting.
So it's just a function of where we are in the market as far as IPOs. We're like in this rotation and we're still waiting for these new ones to set up and create a rotation. And then of course we're going to need the market to support it as well. And as you know, some of the big players of the S&P have actually been leading more than the growth at times this year. A little bit of pullbacks and a little sideways action on the NASDAQ. And so even yesterday we pulled back to the 21 EMA. So, we're going to be hitting some turbulence here as we try to break some new highs, and we're going to have to see.
Okay. All right. So definitely, and I remember you were so looking forward to 2021 when we were talking last year to see what was going to be in the pipeline. Yeah. So,
and I still am. I'm still hopeful.
You ever hear this? Man plans, God laughs. So anyway, looking at this, and you're looking at the NASDAQ. I know that your trading isn't your thing, but do you think this could be kind of a sign that the appetite and all the liquidity that people talk about might be drying up, and that's why not as many companies are coming to market, and the ones that are not attracting the volume that they did last year when there was more euphoria? And you would think there'd be more euphoria now because the market has advanced and taken out last year's highs by a mile.
Yeah,
but it's been thin. It's been thin. I mean, you could look at all the advanced decline lines, even in NASDAQ, and with NASDAQ making new highs, it's very, very, very a negative breath at new highs in NASDAQ. It's one of the worst. If you put up AD or breath against NASDAQ, you'll see with price making new highs, we're not even close to the highs of breadth and advanced decline lines here. So you think that could be part of it? Maybe it's a sign that the character of the market, and even though the Fed has been easy, that liquidity for these things just isn't there like it was last year.
I mean, I think, anything is possible, right?
Yeah.
But, it's still, the year's not over.
Yeah. Yeah, true.
And there's still leaders in the market, CrowdStrike,
Yeah.
it's a great IPO for 2020. And it's one of those examples that's held the 40-week line, starting to
But you
maybe
can't
break out.
throw a dart. You can't throw a dart anymore and have
Yeah,
all of this work.
right. The dart is not there. I mean, Snap had
Yeah.
amazing earnings last week,
Yeah.
It's just that the new IPOs, they're just, it's not their time yet. And there's tons of great stocks, but you got to be there at the right time, right?
And you have to keep your discipline. If you have measurements on volume for things to qualify, you can't change your rules just because there isn't as much activity. That would be like
Exactly.
FOMO, right, Kathy?
Right, exactly. You're exactly right. I want to look at, I do want to share this one coming out of an IPO base, Doximity. I do like to play these IPO advances at times. I don't particularly have this one, but just to give I have a friend, Jim Ropel, you may have heard of him. He does his interviews and he likes to call the candy.
Oh.
So for
Yeah.
candy, this Doximity one is really interesting because it's barely been trading. It already has two what we call IBD mutual funds in it. So one of what IBD, Bill O'Neill would claim, the more quality institutional funds already owning it. And it's got an IPO base. It did try to break out and came back down, which is totally normal. But this could be one that maybe has a successful IPO advance phase, and by the time while we're waiting for some of these due diligence phases to finish out.
Okay. Well, Kathy, being as patient as you are, and I think that's a great quality to have, and not to be frustrated because there isn't as much to do. What's the best way for people to follow your work? And I think it's great to talk about patience and then walk the talk, and to show people that you don't have to be in the market all the time, that less is more. So what's the best way for people to follow you, subscribe, and when things pick up, be with you?
Yeah, I do believe less is more. I like being able to, go out and, I exercise a lot. I'll share with everyone, I'm getting ready to do a half Ironman in a couple weeks. So, I'm really busy with trading. So in a way, this slower market for me, because I'm looking for those early leaders that are still building bases, I've had more time to focus on that and just still keep my eye on the market, of course, but I don't have to be as closely tied. But yeah, I'm happy to answer questions on Twitter. This is my handle, KGD_investor. And then, of course, interviews I've done and my co-authors have done are on the lifecycletrade.com. We'll, of course, post this one as well. And then if you're interested in the book, of course, it's on Amazon. And again, talks about all the phases and patterns that you and I have been discussing over the last year now. How long we've been talking? For a while now.
It's got it. Yeah. I look forward to it, and let me coach you, Kathy Donnelly. Keep running your race in the market and in the Ironman. And,
thank you.
Yeah, and good luck in both arenas. And appreciate you coming here and just telling it like it is, with what's happening, and even reporting to us not much right now. And appreciate you giving us your time and coming here, even if there's not much to talk about. So appreciate you being here, and people interested in IPOs. Kathy's a very good specialist when it comes to this, and as you could tell, is patient. So thank you, my trading warrior sister, for being with us again today.
Thank you so much, Dale. I appreciate it. I appreciate you, welcoming me, my insights. Because yeah, I mean, I think just for some people it may be like, wow, it's so boring. She's not really trading, but like you said, I'm just waiting for the best setups for me. And so
we get paid to wait, Kathy.
Exactly. So people, figure out what your strengths are and really, really hone in on your strengths. You don't have to be good at everything, but just be really good at a few things, and then you will succeed.
Thank you, Iron Woman.
Thank you, Dale.
All right. That's a wrap, everyone. Thank you again, Kathy. Remember, everyone, don't just count your pips, count your blessings. Good luck with the Fed today. Could join the crew in 20 minutes on Morning Edge, and I'll see you tomorrow. Adios. Thanks, Kathy.